a lot of times we are seeing that we are in the reflationary part of the equity cycle or the business cycle. And we usually, for the bond markets, we'll see this bear steepening. Now, on the contrary, bear steepening, the word bear isn't all that fearful, because it has been found that the S&P 500 on the average 6-month return basis performed the best during the reflationary part of the business cycle. Now, if we are going to split the entire business cycle into 4 big parts, the first part, which is related to the season of spring, is the reflationary part. And by reflationary, it means that the economic growth prospects is going to be very strong, but yet inflation is still not high. The second part is the inflationary part, whereby economic growth is still strong, but yet we see prices or inflation moving higher. The third part, which is the autumn stage, that is where the economic growth starts to slow down, but yet we still see high inflation. And the last part, of course, was last year in the final part, which is the winter months. That will be the recession, whereby we see poor prospects for inflation and also economic growth contracting. So right now, it's very sure that we are in the first part or the early part of this new business cycle ever since we step up of the recession last year. And at the reflationary part, usually almost all the time, we will see a bear steepening of the yield curve in the US, but that usually makes it very good for equity markets throughout the world.
But even if you do sound bullish on equities, I see that, certainly you have to be quite choosy, right? You have to sort your sheep from the goats, and you're actually remaining neutral on US equities, and you're more bullish on EM Asia.
Yes, you're right, especially from what I heard just now, that the 1.9 trillion fiscal stimulus will not just support the US, but also will spill over to the rest of the world. Now, Asia being the first in and first out of the COVID pandemic, we are likely to see that Asia, and including emerging markets, will step out of it much faster than the developed markets. Although the PMI numbers for the first 2 months doesn't look well, I mean, it's still expansion, but at a slower pace, particularly from China. And we can take China as a good proxy for the rest of the emerging markets. That is really because of seasonality. I know we just celebrated the Lunar New Year. But if you look at the seasonality of the last 20 years for China's PMI, March, April, May will be the good months. So I'm expecting Asian emerging markets will likely do very well in terms of their equity markets over the next few months. More so for the cyclical sector, which tend to do better during this reflationary part of the economic cycle.
Right. When you mean Asia, Francis, are you talking about largely China, Korea, as well as Taiwan, that have done very well as markets in that first in, first out theme, or broader Asia as well, including ASEAN, India?
I subscribe to the latter, broader Asia, including ASEAN and India. Now, the fact is that China, our North Asian neighbors, South Korea, Taiwan, has been doing well because a significantly higher share of their index was tied to the technology story. Now, technology is still going to go strong. However, we are seeing that the reflationary efforts around the world right now, the higher GDP growth, is going to spill over more to the cyclical part or to the value part. And that, I mean, sectors in the financials, in the materials, even in industrials, and also in the energy sector will likely see a stronger uptick this year compared to technology from last year. So yes, this year, we are still going full on into the technology, into the cyclical sector. Also, those are in the value sector as well.